Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me, we have Shawn Cruz. He's the manager of trader services at TD Ameritrade for a look at some of the technicals on the Nasdaq-100 and the bigger components within the index. Shawn, it's great to have you with me as always. And do you think we might be hitting some resistance here on the chart?
That's what it looks like. So we've been tracking, the Nasdaq's, clearly been able to outperform a lot of the other major indices so far year to date. And it looks like this is a key level that we've seen the Nasdaq trade around going all the way back into early February. So before a lot of the selling even started, this actually seemed like a pretty key level that we are at right now. So I think looking at 9,400 on the Nasdaq, that looks to, once you get up towards those levels, is where you start to see buyers get a little bit exhausted and volumes start to taper off. And that's what we're watching here. So definitely a level here where we're at right now. We're at 93.75. So it just looks like to move higher here, you're going to see some pretty significant breakouts.
Yeah, and it makes sense because we're at the tail end of earnings, right? And this happens virtually every earnings season when there's that vacuum. And the only thing that we're focusing on, particularly in this environment, are the macro headlines, whether it has to do with the pandemic or geopolitics or what's happening in Washington. The markets are going to be really predisposed to those larger headlines moving in the absence of corporate news.
That's true. And so there's no real new corporate news coming out there. So we'll be sort of at the mercy of the swings and some of the day-to-day data that we're getting, not only around, I think, COVID-19 cases, but also some of the more high-frequency data points like weekly jobless claims. Then I do think just in general headline risk could be what starts to cause some of the day-to-day swings. I'm looking more for if there's going to be a breakout on the upside. I'm really looking more towards, is there going to be some sort of clear evidence that some of these restrictions getting lifted is not resulting in such a massive spike in cases and even worse fatalities that you have to get restrictions put back in place. I think that is the key to watch here. If you can see some of these reopenings go successfully, that could be the biggest catalyst to allow us to break out on the upside. Otherwise, you're going to need to see more support packages, more likely on the fiscal side from the Treasury and Congress than from anything we're going to see on the monetary side from the Fed, just because the Fed's really meant to be a lender. They're not actually supposed to be out there spending. I think if you're going to get more of a long drawn out shutdown of a lot of these local economies, you're going to need actual fiscal support. I don't know that monetary support is going to be able to get us through this if it lasts longer and longer.
All right, Shawn, and you also have a number of charts here looking again at some of the larger constituents that have been leading the way with the Nasdaq-100 and the market overall, and even with the individual names, you think that we could see some of that as well.
So that's where I think we're going to start to run into a little bit of a resistance level holding here on the upside. And that is we're also seeing a lot of the individual components of not just the Nasdaq-100, but also, these Nasdaq listed companies are major components of some of the other indices as well. But they all seem to be hitting support levels of their own here. And so I find it difficult to see a world where we get a meaningful breakout higher from any of the indices which are hitting up against these resistance levels, unless you can get some of these individual names and not just a handful of the individual names. I think you need some of the large components like Microsoft, Apple, Amazon, or Google to start moving higher as well. And especially if you start looking through some of these charts, you have Amazon right up here around 2480. That seems to be a clear-cut resistance level where we last saw them at, shortly after April. You also have Facebook, which was able to break out today. That's one of the major components I'm seeing breaking out. But Google, once again, approaching a resistance level, as is Apple. So I think you need to see some of these major components of these indices break out of their own individual resistance levels before we can get a meaningful spike higher on the upside.
Yeah, and Shawn, even still, without looking at the technicals and from a fundamental perspective, these stocks have not only dropped so far so fast, but also to the upside as well. So pulling back a bit here, finding some levels to consolidate at isn't anything out of the ordinary anyway, right?
No, and I think right now getting a little bit of consolidation at these levels might be a good thing, which would enable us to make another leg higher. And that's really what we've seen at certain points in the recovery after that sell-off, where you would see markets sort of trade sideways just for a couple days to catch their breath, and then we would get another round of buyers coming in to help us leg higher. And that might just be what we're seeing right now, is a little bit of consolidation here, and then we're going to get another round of buyers that come in and move us higher on the overall indices.
All right, Shawn, thanks for joining us as always.
Thank you.
All right, and thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.